Hello family, thank you for tuning in today. I've got an update on the Rockhampton property market for you. So I suppose if you are an investor or a home buyer and you're looking at buying or selling in Rockhampton in 2025, this video is for you. I'm going to jump in and have a look at the demand and supply side of the marketplace to understand exactly what is going on right now and make some assumptions and predictions as to what's going to happen in 2025 and beyond. So this is a very juicy update, guys. I put together this update knowing that a lot of people are out there in the marketplace overwhelmed, frustrated, and just don't know what's going on in a lot of these areas. So this presentation is designed to cut through all of that noise and get to the fundamentals of the marketplace so that you can better understand what is going on here before you make such an important purchase decision. So stick around, guys, you're going to get some tremendous value. Before I dive in here, guys, I'm going to give myself and the business a bit of a plug. If you are new to the channel, my name is Troy Simpacini. I am the owner and head of research of Life Buyers Agency, and Life Buyers Agency, we operate on the ground in regional Queensland under two brands. The brand here that I'm talking about today is Capricorn Life, is our central Queensland brand where Rockhampton is based. And the great thing about us is, as I said, we work on the ground as a local buyer's agent. So my role is the head of research, and I've got a team across all the regional hubs from Bundaberg all the way through to Cairns, and yeah, we work exclusively for the buyer in these markets. And we generally help a lot of investors that are buying from interstate or intra-regionally. We help a lot of investors that become stuck and don't know how to navigate the market, and we work with a lot of people that want access to off-market and under-market value deals, and just all round the better quality deals in this marketplace. Because we're local, we have our finger on the pulse in a lot of these markets and have access to really good opportunities in isolation of competition. So if you are someone that potentially is looking at a market like Rockhampton or other parts of central Queensland and you're struggling, feel free to reach out to me and the team. More than happy to have an initial chat, see if we might be able to add value, and we can then potentially go from there. You can give us a call on that number or visit us on that website. You can jump on our socials as well and check out all our recent case studies for this year. We've done more than 50 acquisitions already this year, so plenty of various case studies there for you to look at there as well, guys. Thank you. Okay, so if you are watching this for the first time, the format that I follow to do these updates is I look at a bunch of data on the demand side and on the supply side, because at the core of a market, that's all it boils down to, right, is supply and demand. And what we want to establish in Rockhampton right now is what's happening on the supply side and what's happening on the demand side. And then what does that mean for you as a potential buyer in 2025? And obviously, if you are operating in an environment where supply is low and demand is high, then we might be in a market where there is ongoing price growth. But if the opposite occurs, maybe the market is starting to go backwards, and it might not be the best time to buy in a market like Rockhampton. So that's what I'm going to be looking at today, is driving through all of these different data points and understanding the point in time of what it's telling us, but then use that point in time data to make some assumptions on what's likely to happen going forward as well. And the good thing about the update today is we've got 3 months worth of data now, reliable data for the 2025 year. So we can use the last 3 months and really use that as a solid base and foundations to make some assumptions around the performance of the market going forward. So we're going to jump in and look at the median house price. We're going to jump in and look at supply around stock levels, listing volumes. We're going to jump in and look at the days on market around how fast things are selling in Rockhampton. We're going to look at the overall absorption rate of how many properties have come to the market and what percentage of those properties have actually sold, which determines how healthy the market is. We're going to look at the rental side of the market, diving into things like the vacancy rates, the change in median rents, similar to the change in median house price. We want to understand if the rental market is growing as well, so you as an investor can capitalize on those more juicier yields. And we're going to have a look at the new supply pipeline. Obviously, a market can be great, but supply is always the enemy of capital growth. So we want to understand if there is a big supply pipeline in Rockhampton and you're coming in to invest in this market, you need to be aware of it, because you could potentially have a lot of competition there in the future for your property. And then I'm going to finish off just with a bit of a summary of the presentation and then make my predictions on the 2025 position for Rockhampton going forward. All right, let's take a look at the median house price for Rockhampton and what is exactly going on there. So we can see here that the median house price in Rockhampton as of March 2025 is currently $559,000, up from $449,000 in March 2024. So essentially we've seen the median house price grow by 24.4% in the last 12 months. If you can see that red circle there, that's where we are at this point in time, March 2025 at $559,000. So huge growth there in Rockhampton over the last 12 months, but it's very much been the trend for Rockhampton over the last couple of years. As you can see there, going back at least 3 years, there's been this huge incline there now, right? So Rockhampton's had a really, really good run. But look, I know a lot of you guys are here today and you're figuring out, well, Troy, I know Rockhampton's had a good run. That's what's brought me to this area, but I want to know, does Rockhampton still have steam in the engine? Can I get in and make money as well, like everyone else that have made money over the last couple of years? Well, look, I've got a couple of points to add to that. Well, the reason why this median house price has done what it's done over the last couple of years is because obviously there's been a lot of macro drivers pushing the market forward, things like population movements, infrastructure spending, low job vacancies, the list goes on when it comes to like those macro drivers for Rockhampton. That's been able to then trickle down into the housing market, and that's put downward pressure on that market, and it's created the imbalance between supply and demand over the last couple of years. So Rockhampton's always been, over the last couple of years, lowest levels of supply and strong demand, and that's obviously been able to put upward pressure on those house prices. And look, guys, the good thing for you guys right now, and I can say this, is that there's not much that has changed when it comes to those macro pressures that have been able to put downward pressure on the marketplace and trickle down. The good thing is that none of that's changed, because I know that population movements is still as high as ever. The unemployment rate is very, very low. We're still seeing a huge amount of public and private investment. And I think that's only going to be propped up again when you look at the federal government election. There's been a lot of election promises for this region when it comes to infrastructure investment, and then obviously the incentives around first home buyers being able to get into the market a lot quicker, a lot easier, with discounts around the deposit you can put forward, and incentives like not being able to pay stamp duty. So at this affordable price point, it's just going to open up the market to a lot more other buyers, and I think that's going to continue to put upward pressure on this median house price. But the good thing is for you, and this is important for you to know, is that not much has changed from previous years. So that could mean that the same ingredients are in place for ongoing price growth in 2025. But obviously I don't have a crystal ball, but the good thing is that I could see that there are those same fundamentals all in place, where the data is aligning and the stars are still aligned. The second you start to see misalignment is when I would say maybe it's not the optimistic time to be buying in a market like this. You need to potentially consider other markets, but Rockhampton is still very much ripe for the picking at this stage, guys. And what I like about this median house price is that despite it having a few big years, it's still a very affordable median compared to like the Rockhampton region. Like, I think there is a lot of people still within this region that have strong household incomes that have the ability to still get into this market. Like, it's not beyond your average punter in Rockhampton. That's where it becomes a bit of a worry, when the median house price pushes up too high, where it stops the local market from getting access to. Like, it's still a very affordable market for locals, because you want the locals to be the one driving the market forward, not out-of-town investors or not intra-regional home buyers or interstate home buyers. You want it to be driven by the local market, because that's the biggest transaction volume that allows for the market to get stability and to put upward pressure on house prices. So I see a lot of affordability there for locals, but not only that, there is heaps of affordability when you benchmark it to Brisbane, Sunshine Coast, Gold Coast, and you have a lot of people pushing up from those markets into places like Rockhampton to chase employment and lifestyle, and then obviously interstate buyers moving into this area as well to capitalize on the employment and lifestyle opportunities Rockhampton has to offer. So yeah, a big 12 months, guys, but as I said, there's some really good things still going for this market, which suggests that in 2025 it's in for another big year. Obviously, no one has a crystal ball around this, but I can tell you that the same fundamentals apply at a macro level. And as we move through this presentation today, we're going to understand the micro level data around supply and demand. And if the macro and micro line up, then who knows, 2025, you're looking at double-digit growth again. When I did look at the last 3 months worth of data between January to March and what that median house price has done in the short window we've had this year, it's done 2.3% already over the last 3 months. So the market is definitely on the move. And look, I'm not one to say that you can just easily extrapolate that out over the next 8 months and then you end up with what, close to 10%. No, I'm not saying that's gonna happen, but it's definitely suggesting that the market is in for another big year, having done just over 2% already in the last 3 months. So I just mentioned that the median house price of Rockhampton over the last 12 months has done double-digit growth, and in the last 3 months it's done over 2% already. But a lot of that has been attributed to what is going on at a macro level. So the macro level environment for Rockhampton has been healthy and is still very healthy. But now for there to be ongoing price growth in 2025, we want to make sure that there is both macro and micro ingredients for capital growth. And that's what we're going to dive in and look at now, looking at the supply side of the market, which is a key ingredient to ensure that the market still has capital growth left in it. So we can see here that stock levels are sitting at 0.3%, which means that there are approximately 114 houses currently listed for sale in March 2025. And then compared to March 2024, when you look at it from a comparison perspective, listings are up by 5%. So if we look at that red circle there, that represents the point in time data around stock levels, 0.3%. So that's very interesting when we compare it to last year. So last year was obviously a low supply environment and that led to double-digit growth. And we're now seeing like a slight increase of only 5%. And look guys, I'm not too concerned there despite there being an increase, because that increase is rather small. And we can actually see here that like over the last 6 months of last year, we've really seen an incline in stock levels pushing from 0.2 up to 0.4. And then at the end of last year, we started to see a steep decline down back to 0.3. And if you actually look and squint your eyes, you can see a little black dots in this graph, and that represents the long-term trend. So the great thing about what I'm seeing here is I'm seeing the data reverting back to its long-term trend right now. And I think it wouldn't take much, but I would say if this stock level continues to drop, let's say another 20 or 30 properties, we're looking at stock levels sitting around 0.2, which would represent like the lowest stock levels it's had in recent years. And like it's done really well over the last 12 months, averaging around 3%. And that's kind of where we are still right now. Only an increase of what, 6 or 7 properties in total compared to last year. So for me, from a supply perspective, I'm pretty happy with what the data is telling me there, because we're still in a really low supply environment that is very much on par to previous years and is trending towards being at an all-time low. So that as an ingredient for capital growth is looking very good for me, because Rockhampton is what? Relative backwater, you're looking at close to 100,000 people within the region, right? And that would be more than 40,000 dwellings in the immediate area. To only have the best part of 114 houses currently for sale at any given time represents really low supply levels. And any market that has stock levels sitting under 1% is a solid market, right? If you push into markets that aren't moving right now, that are going backwards, their stock levels are upwards of around 3 or 5%, but we have a market here under 1%, well and truly under 1%, and really, really tight. So that's what you want to see. And I'm really happy with this, guys, because as a key ingredient going forward for capital growth, this is looking good for me. Okay, so we've looked at the supply side of the market. We've established that supply is still very low in comparison to previous years. And obviously the low supply environment has really attributed to the double-digit house price growth we've seen in recent years. But that's been met by strong demand. So the supply side of the market has been only one side of the equation. The other side is the demand side. So what we want to establish, if there is still strong levels of demand, because that's going to be the other key ingredient that's needed for ongoing price growth in 2025. So the metric we look at when it comes to assessing the demand side of the market is a thing called days on market. And all that represents is for every property that comes online for sale, how many days is it taking on average for that individual property to be sold? And obviously the lower the day on market metric suggests that properties are selling very quickly, and the higher the day on market metric means that properties are taking a little bit longer to sell. And then the shorter or longer the property takes to sell is a good way to measure the demand side of the market, because we know then that if things are selling very quickly, demand is strong, and if things are taking a bit longer to sell, then demand isn't as strong. So let's have a look at Rocky now. So we can see here that days on market sit at 31 days as of March 2025. And if you actually look at it compared to last year, days on market, the same as what it was this time last year. So we haven't really seen much of a change. So if you look at that red circle there, that represents the point in time where we are now, 31 days. So that's very interesting to know that there's not much that has changed compared to last year. Now, for those that don't know whether 31 is high or low, 31 is a very low day on market number, guys. That is extremely low, because if you look at it, right, on average in Queensland, the average settlement time frame is between 30 to 35 days before a property settles, right? Not like Victoria, not like New South Wales, where it could take 60 or 90 days. The average transaction day is 30 to 35 days here. So if we have an average of 31, that means that most properties that are coming to market in Rockhampton are literally going under contract within the first 1 to 3 days. So they're going under contract within the first 1 to 3 days, and then they're settling 27 days later, which brings us to this average of 31 days. So that means that demand levels are still very healthy and still very strong here. But that also means now that you as a buyer need to be aware that you are coming into a market that is highly competitive. So that may mean that you have to be quick with your offers. You might have to be aggressive with your pricing. You might have to be flexible with your terms in order to do deals here, because things are moving very quick still. And last year we saw double-digit growth, right? And the numbers this year are pretty much the same. So for me, I'm really liking what I'm seeing here. I'm seeing slow levels of supply and still constant ongoing demand here that's been very similar to last year. So to me, I think that 2025 is looking pretty good from a demand and supply perspective. The macro level data is really starting to take shape here, guys. So that's something that you have to be aware of now, is the market is moving, and if you want to get in, you need to get in sooner rather than later to capitalize on what we're seeing here. But as I said, you need to do it quickly, and you need to be prompt, and you need to be able to navigate this market in a way that you can get in sooner rather than later, because it's highly competitive. Now, another thing you need to be aware of is that this 31-day average is the aggregate for Rockhampton, but there is many individual suburbs in Rockhampton that are all different, right? So they're all different. So what you might actually find is that some of the suburbs aren't as hot, and some of the suburbs are very hot, even hotter. So you just need to be mindful of when you navigate individual suburbs that you might have to treat them differently and on a case by case basis. Not only individual suburbs, but also individual properties. Like this year, we probably bought, I would say, about 12 properties already in Rockhampton for investor clients. They've all been off market, under market value, really good deals. But we've seen similar properties go to market and have literally like 12 different offers and sell for like $30,000 over asking. So that's not uncommon right now in Rockhampton for properties to sell between $20,000 to $30,000 over asking price. And I know certain companies, I'm not going to mention any names, also have a way of price baiting you and do a lot of underquoting in the marketplace. So that's something you need to be aware of as well, and make sure you do your price due diligence before you pull the trigger on any property here, because number one, you don't want to be significantly overpaying for a property. That's a big no-no. But number two, you don't want to go in way too low where you're way off the mark and the agents are not going to take you serious. So you want to make sure you do the right price due diligence in this marketplace, because there is a lot of price baiters out there, guys, and that can be the difference between getting a deal and not getting a deal. But anyway, guys, overall, demand is looking very strong in Rockhampton. Okay, now let's have a look at the absorption rate. So basically all I'm looking at here, guys, is for the last 3 months, how many properties have come to market and what percentage of those properties have sold. And that gives us an absorption rate percentage. And we want to establish if that absorption rate is high, because we know that we're in a market that is healthy, where demand is eating up the supply, right? And any market with an absorption rate generally above 65 is a good market. Any market with an absorption rate above 80% is a great market. And then any market with an absorption rate above 90% is like a crazy frenzy where the market is just swallowing up everything, right? So we can see here that in Rockhampton, right, the overall absorption rate is 87%. So for the last 3 months, the absorption rate has been healthy, sitting at 87% from January to March 2025. And actually, if you look at that last point I made there, it's the same absorption rate as last year. So that's very interesting, right? We're seeing very similar data across the board here. So we're seeing very similar listing volumes to last year when we looked at the supply side of the market. We've seen very similar days on market when we looked at the demand side, and now we're seeing very similar absorption rates to this period last year. And we know what last year did. It did 24%. I'm not a betting man, but all the data is looking pretty good for me for another big year in Rockhampton, guys. So if you looked at this absorption rate here, we can see that we had a total of 333 listings between January and March, and then we had 292 sales. So the best part of only 30 properties there left over that will roll over and be absorbed most likely, not in March, but in April this month. Whew, I'm liking it, guys. Look, I think if you're an investor now and you've been worried about if you're too late to the party for Rockhampton, I don't think you have to be. I don't think you should be concerned, because all the data is just flowing and it's just remained constant and is on the same trajectory as what it was last year, and last year did 24%. So I'm really liking this, guys. The demand side of the market is healthy. That absorption rate of 87%, which is in the upper quartile of absorption rates, which suggests that the market is very well balanced and is very healthy, guys. Okay, let's quickly poke our head over to the rental side of the market and see what's going on there. So we can see that the median rent continues to follow the rising trend, now sitting at $478 per week for houses in Rockhampton. And it's actually up $35 or 7.9% compared to March 2024. So we have a rising rental market here, guys, where that median rent is growing year on year. And as you can see, it's had a really good run over the last couple of years. But the great thing to know here from an investment perspective is that rents are not going backwards, because often you come into really good markets to potentially buy in, but then the rental side of the market isn't great. So it just doesn't make sense to get huge price growth, but then you don't have anyone to pay the mortgage, right? So the good thing about Rockhampton is that you can come into this market and still potentially make money in 2025, but at the same time, you're going to be able to rent your property at a premium, and then at the same time, your rents are going to be growing as well by close to 10% each year. And just looking at that median rental figure of $478 per week, that is still a very affordable rental market, right? I know most of the things that we purchased in the last 3 months, let's say we purchased about 12 properties, they've all been between that sort of 500 to 560 range, and most of those properties were renting for close to $600. So in the better suburbs, you're going to be pulling close to $600 or more, and obviously the better properties as well, you're going to demand more of a premium. So that means that your yields, based on the median house price and based on the average rental returns you're getting in the area, is probably sitting at around that low fives. But if you massage the deals around and you find the good deals where the rents are higher proportionally to the purchase price, you're going to have those higher yields for sure. And it's not uncommon to get above a 5.6% yield in Rockhampton. We do it every week with the assets that we buy. So just be mindful of that, guys, that most properties, I would say around that 550 range, are returning close to about $600 per week rent, and most of the properties below that $550,000 price point are probably returning more closer to that sort of median rent we're seeing here now. So you just have to be mindful of that. Individual suburbs are different, and also individual properties are different. And look, this rental market is still very affordable. I think that rental market can continue to grow. I think that could hit $500 per week by the end of this year, definitely. And that means that more juicier yields in your back pocket as an investor. So yep, overall, guys, really healthy rental market in Rocky. So we've seen that rental market grow by 7% over the last 12 months, increasing by $35. Why that's been the case is because of the low supply environment, and that comes back to the vacancy rate. So we're going to have a look at the vacancy rates here now, and we can see that the vacancy rates continue their downward trend, now sitting at 1.5%, meaning that there's 69 vacancies currently available for rent in March 2025. So if we actually turn our attention to this graph here, go to that red circle, that's the point in time which we are now, 1.5% or 69 listings. Interesting graph, this one, and we can see here that like long term, Rockhampton has been trending around that 1%, and then over the last 12 months, it kind of pushed up around that 1.2%, and then it pushed up late last year, to around that, I'd say 2.5%, and now it's on a downward trend back to 1.5, and looks like it's going to continue to trend down and probably go back to its long-term trend of around 1%. Look, one of the things that concerns me is when I look back the last 4 months, I see this really steep jump, and the really good thing is that we've seen a massive correction there. So I don't know exactly what that was, whether that's caused that huge spike. It just could have been that time of the year. We've just seen an increase from roughly around 60 properties on the market at any given time for rent, jump to around 100, 120. So it virtually doubled for that last 3 months of the year there. And that could potentially come back to a lot of people sort of moving at the end of last year, which causes fluctuations in the vacancy rates as property become available because people are moving in and out of the region. From what I know, there hasn't been any big developments that could have spiked the supply levels for that period. Development has been very low in Rocky, and we haven't really seen any big multi-unit dwelling high-rises or townhouse complexes constructed. So that is a little bit abnormal, but the good thing is that it's reverted now back to its long-term trend. And look, when it sits at around 1%, 1.5%, we know that is enough of a vacancy rate to sustain rental growth. So at around 1.5 or 1% last year, it managed to grow by $35 per week. So as long as this rental market and this vacancy rate stays around 1%, we're going to continue to see rental growth. And I think if it continues to go down even further, that's where probably we're going to see double-digit growth. And I think if this comes under 1%, we won't see single-digit rental growth. We'll see double-digit rental growth. But I'm not too sure if it could get to that, but it's definitely something to keep an eye on going forward in 2025. But for now, it's reverted back to its long-term average, and at this long-term average, it's still enough to allow for the market to have single-digit rental growth. So vacancy rates, guys, yeah, it was a little bit concerning late last year, but now looking pretty good for me. All right, so we've looked at all facets of the marketplace. We've looked at the supply side, we've looked at the demand side, we've looked at the rental side of the market. And look, all of that could be well and good, and you could be licking your lips for Rockhampton and say, you know, let's get into the marketplace. Before you do, pump your brakes, because this is the last thing I want to cover off on, because this could be the thing that sends all of that growth to come crashing down, right? Or for it to never happen at all, which is new supply, right? Because supply is the enemy of capital growth. So you don't want to come into a market that is just flooded with a pipeline of supply, because that just creates additional competition for your property when it comes up for rent and potentially at resale, because you have 100 or properties that look exactly like yours, probably for a similar price point in a similar location, and that just doesn't allow for your property to have that element of scarcity to get that price appreciation and premium rents. So we look at building approvals as a means to assess what the supply pipeline looks like. So building approvals is a step in the development process. So developers generally would identify a parcel of land, go through a feasibility stage, then obviously go to council to get building approvals, and then once they've got building approvals, they go out there and they turn over the soil, go through a construction process of building the end product, and then those end products come to the market and they're available for purchase or available for rent. So building approvals is a good way for us to determine if we're coming into the right market or not from a supply perspective. And the lower the building approval rates means that we're coming into a market where there is low levels of future supply, which is a good thing as an investor, of course. But if you're coming in and the opposite is occurring, then that could be a potential red flag for you to pump the brakes and weigh up all the pros and cons. So we can see here that the building approval data for Rockhampton, there's been a total of 123 building approvals in place for the 2024 to 2025 financial year. So one of the things that I like to look at is look at the building approval data in comparison to previous years, right? And that's a good way to measure, you know, the pipeline of supply, because if you look at it, right, most construction takes on average between 1 to 4 years before we see an end product. It's a pretty arduous and slow process. So what you actually want to look at is the last 2 previous financial years, if they were high, because that means that new supply is potentially hitting the ground this time around. And then if we look at the building approvals now, then they're likely to hit the ground in the next 2 or 3 financial years. So for me, right now, the point of time data is extremely low. And the last couple of years, still a very low supply environment. And when construction was in a boom, you go back to 2004, 2005, you're looking at 4 times the amount of supply in those areas. And now we've just come way back down where building approvals are at an all-time low almost. And that's just a reflective thing, I think, when it comes back to the state of the construction industry. Like, it's very slow. It's very costly. A lot of first home buyers have lost faith in that process and they don't trust builders anymore. Majority of them go broke. They don't do a good job. So I think that's all playing its part in like these overall approval numbers. So for me, like, I'm liking what I'm seeing here from an investment perspective. Like, obviously I'd love for there to be more new homes built in Rocky for first home buyers and as to cater for the growing population, but there just isn't seem to be enough of a supply pipeline here. But for you as an investor, that is a good thing, because that means that you're buying into a market where supply is grim, and then the likelihood of you getting capital growth in the next 3 years, in the next 5 years, in the next 10 years is very good because of this type of construction environment. So yeah, guys, that's the billing approvals data for Rocky. Woo! All right, everyone. Congratulations, you've made it to the end. And I wanted to try and keep it short, sharp, and punchy today. Usually, I ramble a lot, and these presentations go for over an hour, but I wanted to keep it under 40 minutes today because I know your time is extremely valuable. But thank you for spending your time with me today, guys. I really appreciate it, because there's not too many people out there giving this type of value away. And for me, I just see it as community service content, you know. And there are a lot of people that come into regional Queensland and they just stuff it up. They don't know what to do, they don't know what's going on, and they just stuff it up. And this information is designed to help you better navigate the marketplace. So I'd really appreciate it if you liked, shared it, give it a thumbs up, leave any comments or questions in the comment section, and I'll circle back and answer those ones for you as well. Or if you want me to cover up on a specific topic as well, or answer a specific question, I'm more than happy to do that as well, guys. But I'm going to finish off now by just giving my I suppose predictions for 2025, and you would have heard me say it throughout the presentation today anyway, but let's touch on that now. So supply and demand data looks the same as what it was last year, and we've established that, right? The supply data, the listing volumes were the same, sitting at around 0.3%. Days on market at 31 days, which is where it was last year, and the absorption rates at 87%, which is where it was last year. And then we know what last year did, right? It did double-digit growth. So given that all the demand side data, all the supply side data is the same, and the same macro level fundamentals are putting pressure downwards on Rockhampton, I expect this year, 2025, another year of double-digit growth. And what's going to add to that is a dropping interest rate environment and additional prop up from government incentives for first home buyers with lower deposits and the elimination of stamp duty. So Rocky going to do double-digit growth in 2025, guys. So if you're watching this and you're an investor, you're not too late to the party. Get in sooner rather than later, or give me a call. I can help you with that. Now, from the rental side of the market, if vacancy rates drop and stay around its long-term average of 1%, we are likely to still see ongoing single-digit growth. So we noticed that with the rental market, it peaked there for some unknown reason, then it's reverted back to its long-term average, and then at its long-term average, it's managed to have single-digit growth. So providing it stays around that long-term average, we're going to see single-digit growth, but if it dips below 1%, we're going to see double-digit rental growth. But nonetheless, you're coming into a really healthy rental market where vacancy rates are low and rents are growing. So you can come in and still get relatively juicy yields in this marketplace. And if you buy a property that's vacant, you know you're going to have the ability to rent it and not have a long vacancy period there like other markets around the country where it takes months on end to rent a property. Here, on average, most properties will be rented in, I would say, the first 7 to 12 days. That's definitely the case here in Rockhampton. So that's my predictions for this year: double-digit rental, double-digit house price growth, and single-digit rental growth for Rocky. So if you're an investor, get in as soon as you can. Now, again, guys, my name is Troy Bassini, the regional Queensland king. If you are an investor and you've liked all of this, right, it's all made sense, but you go out and you give it a crack yourself and you find that you're running into a lot of trouble, you're not finding the deals, you're not getting into the market, feel free to reach out to me and the team, guys. You can visit us on that website, give us a call on that number. You can also follow me on social media as well. You can follow me on Instagram or TikTok. I put a lot of free content out there as well, a lot of tips and tricks to help you navigate the market, so feel free to do that as well, guys. But yeah, again, this content is free and all designed for you to better navigate the marketplace, and I hope that's been really helpful today, guys. But again, thank you for tuning in, and I'll see you on the next video, family. Cheers and goodbye.